Hello there. Welcome back at Zimsec A-level economics. In this video, we want to look at interest rates and also we are going to look at economic growth. So we have got a typical exam question that we want to look at that is on interest rates and economic growth. So you'll see that this is an essay question that we're going to look at. So before we look at the question, we would want to understand what exactly are interest rates, and then we also try to understand what do we mean also by economic growth. So very important. So in terms of our interest rates, we are saying uh, an interest rate basically is an amount due per period as a proportion of the amount lent. It might be an amount deposited or it might be also a amount borrowed. So basically that's what we have on interest rates. And the basic explanation that we can give in terms of interest rates is that it explains the cost of borrowing. The cost of borrowing money is interest rate. So basically, that's what we have. So you see that it also is the amount charged on top of the principal by a lender to a borrower for the use of an asset in the form of money in this regard. So basically, that's what we have in terms of our interest rate. So if we understand it from the point of view that it explains the cost of borrowing money, it becomes a simplified version of the explanation of interest rates. Then also we want to understand what we mean by economic growth. So economic growth, you'll see that it's a comparison that it takes place of the total output in the economy from one period to the other. In other words, we are saying the GDP, that is the gross domestic product, which is explained as the total monetary value of the goods and services that has been produced in a country over a period of time, usually annually. If that GDP increases from one period to the other, we say there is economic growth. So basically, we are saying uh, the total monetary value of the goods and services that have been produced this year, if the value increases to next year, we say there is economic growth. So we can try to define it by saying it is an increase in aggregate production in an economy. So it also becomes a brief explanation. And also we can try to define it from another point of view by saying it's an increase in the capacity of an economy to produce goods and services from one period to the other. So basically, that's the other explanation that we can give in terms of economic growth. So those are the explanations that we have, guys, in terms of our interest rates and our economic growth. And before we go to our question, please let's not forget to subscribe and share to our channel. Let's not forget to share the link to our colleagues who are doing Zimsec A-level economics. And let's take note, more typical examination questions are going to be uploaded on this channel. So let's stay tuned. By staying tuned, we are saying let's subscribe. Let's turn on the notification button so that you get notified of new uploads. So going forward to our question, would see that this is the question that we have, which is interest rates in Zimbabwe further increased in the month of March 2006 due to high inflation in the economy. So first part of the question is A, economic, so with 18 marks. And then the second part, discuss the cost and benefits of economy in Zimbabwe. So basically, we are going to start with the first part, which is A, which reads, explain the effect of high interest rates in the economy. So obviously, we are going to look at effects, and effects, we are saying these are results that we are going to see after having high interest rates in the economy. And you've explained what are interest rates as the cost of borrowing money. So if that cost increases, what is exactly going to happen in the economy? So that is effect. What are the results? So we have them articulated on point A, where we've got effects of high interest rates in the economy. So the first one that we have is cost of borrowing will increase. Cost of borrowing will increase. So obviously, we are saying this is the cost of borrowing. So you are going to see that the cost of borrowing money will increase. So obviously, we are saying the public and the businesses are not going to easily access money or access funding from financial institutions, since we are saying the cost of borrowing has increased. So we are going to see that it's going to cause some negative effects in the operations of the economy. For example, we are not going to see an increase in the total production of goods and services. Remember, for the businesses to expand their production capacities, and they have to easily access the funding from those financial institutions. So basically, if we have such a scenario, we are going to see a contraction in the production of goods and services in the economy. So basically, that's what we have on point A, which is cost of borrowing increase. Then we try to go to the next point. Mortgage and loan repayments will increase. Mortgage and loan repayments will increase. So why we have such a scenario? Remember, we are seeing the the interest rates has increased, the cost of borrowing has increased. So those who have already accessed loans, those who have already accessed the funding, obviously they will make sure that they make early payments in terms of their loan, their mortgage repayments, in terms of their loan repayments, since it's now it will appear as if it's cheaper for them to pay because they've already acquired their funding that they accessed in terms of their cost of borrowing is not going to be adjusted with the recent increase that has taken place of interest rates. So basically, that's what we have on the second point. So on mortgages again, we can try to understand exactly what are mortgages. So you see that a mortgage basically it's a form of loan, it's a long-term loan, and it's an agreement by which a financial institution lends money at interest in exchange for taking title of something. So basically, that's what we have in terms of a mortgage. And then on the next point that we have in terms of effect of high interest rates in the economy, we have got due to high cost of borrowing, consumers will take less loans, thereby reducing consumer spending, decreasing consumer demand, and investing at a slower rate. So basically, we are saying due to high cost of borrowing, we are going to see that there's going to be a reduction in consumer demand in the economy. So that's another effect that we can talk about. So when there's a reduction in demand of consumer, when there's a reduction of consumer demand, obviously it's going to negatively affect the businesses in the economy. They're going to earn less revenue in terms of their sales because demand has decreased, and we are also going to see investment decreasing. Investment decreasing. So investment, we are saying investment, we can explain it from the point of view of the opening of new businesses. We are going to see opening of new businesses going down. Remember, for the business to be opened, they have to access funds. So if it's now costly to access those funds, obviously, we are going to see less businesses are being opened. Or the increase will be at a slower rate, like what the description that we have on the last part, that increase will be at the slower rate, which is also a negative effect. So basically, that's what we have in terms of this point of high cost of borrowing, contracting the consumer demand. So on the next point, we've got savers owning savings accounts any more returns. So we are saying these interest rates also, they do apply also to savers as they deposit their money in those interest bearing accounts. So it means the interest also of their returns will have increased. So that will attract depositors in those interest bearing accounts, whereby they are going to earn more by depositing amounts in those accounts. So basically, that's what we have on that point. And then we go to the next point. As stocks becomes less attractive, as stocks becomes less attractive. So we are saying instead of instead of investing your money in buying stocks, it's the investors will be attracted in maybe investing their money in putting them in the interest-bearing accounts. So optionally, we are saying they will opt the interest-bearing accounts, which where they are going to earn more returns in terms of their interest rates that have been increased. So basically, that's what we have. So it's a matter of comparison that they are comparing investing in stocks or investing in putting their money in those interest-bearing accounts. Since interest rates have increased, so they are going to be attracted by putting their money in those banks. So so that's what we have on that part. That is on stocks are becoming less attractive. So that's what we have on this point. And then we go to the last point, saying higher interest rates lead to a reduced value of bonds. Higher interest rates are leading to a reduced value of bonds. So from that point of view, we can see that higher interest rates are leads to reduced value of existing bonds. For example, when an investor can receive a higher return on a newly issued bond, there is less demand for existing bonds with lower return. So basically, we are saying the investors will be attracted uh, with the current bonds and the already bonds that are there, the return will be less. So obviously, with the comparison that will be made there, it means it's more attractive uh, to the current bonds that are earning more returns. So basically, that's what we have on that part. This is what we have on the last part of our effects of high interest rates in the economy. So obviously we have the second part, which is saying discuss the cost and benefits of economic growth to an economy, as such as that of we want the costs and also one of the benefits of economic growth. So we have defined economic growth as the increase in the total monetary value of goods and services that are being produced in the country, or we have explained it as the increase in GDP from one year to the other. So basically, this is what we have. So in terms of our benefits, we're going to start on our benefits of economic growth. What do we benefit from producing more goods and services? That is the issue that we have on benefits of economic growth. So we have them also articulated on the second part. We are saying the first part we are saying result in higher income, thus enables consumers to enjoy more goods and services. Obviously, when we have got economic growth, we are saying uh, we have got more production of goods and services that are taking place. So obviously, we are saying the businesses that are operating in that economy are going to earn more revenue. By earning more revenue, it means also higher profits, and those higher profits, obviously, they increase the remuneration of workers, and the workers are the consumers. And when they earn more, they are going to have higher income. When they have that higher income, they are going to spend that higher income on buying goods and services. So basically, that's the explanation that we have on the first part. There, where we have got a result in higher income, that's enable consumers to enjoy more goods and services. So going to the second part, it leads to lower unemployment. Remember, when we have got more potential to produce goods and services, it means we are going to have a higher economic activity whereby uh, firms or businesses are going to expand their production capacities. When they expand their production capacities, they are accommodating more workers. So by accommodating more workers, we are going to see more workers being employed, so unemployment will be reduced. So that's the explanation that we have on the second part. Then go to the third one, lower government borrowing. Obviously, we are saying since we have got high economic activity, we are going to see also the government earning more revenue from taxation. For example, we're talking about the value-added tax from the tax that is charged, that is an indirect tax of VAT that is charged on consumer goods and services. Obviously, we are going to have more goods and services being bought because of those that are income that we've explained on the first point. So they earn more revenue through VAT. They also earn more revenue from income tax. Remember, income tax charged on businesses on their profits also. If they earn more profits, it means also the government will collect more revenue from them. So that's what we have. So in that scenario now, from that point, we can see that there is no need for the government to go and access credit lines in terms of borrowing. So that's why we are having that point of lower government borrowing. So we go to the next one, improve their public services. And this is also being explained from the point of view of higher revenue that is being earned by the government, obviously through taxation as an instrument of fiscal policy. So through that increase of revenue collection, they are going to channel those funds to improving public services. Examples of public services that we have got health services, we've got education services. Those are typical examples that we can talk about public services. And we see that it's a cascading effect that is going to cause the upliftment of the quality of life in that local economy. Because obviously, when we have the those facilities are being upgraded because of the revenue that is being earned by the government. We are also going to see that even the health position of the citizens of the country is also going to be enhanced. So that's what we have. So you see that uh, due to uh, due to high economic activity that is taking place in the economy, we are going to see that there are some we are going to see some activities that are going to harm the environment. We're going to see pollution taking place. We are going to see the issue of land degradation taking place because of the high economic activity. So we are saying the revenue that is being earned also can be used to protect the environment. So that can only happen when there is high economic activity, whereby we are saying revenue is being collected. We have got more money that can be spent on protecting the environment. So basically, that's what we have. And this money that we are talking about, we can also explain it from the point of view of the firms that are firms earning high profits, so they can channel their funds to environmentally friendly activities. So basically, that's what we have. Then we have this point. The next point is increased investment. So basically, we are saying due to economic growth, it's also being explained from the same line that when we have got economic growth, we are going to have some positives, and we are going to have a reduction in several macroeconomic problems. So in that sense, we are going to see that individuals and even the businesses in that economy are going to be in a better position in terms of funding. So there is an easy they can easily access funding. So obviously we're going to see opening of new businesses taking place, which is an investment process. So basically, that's how we can see increased investment taking place when there is economic growth. So we go to the next point, which is increased research and development. This is from the point of view of the firms that are operating or businesses that are operating in that economy. When they earn more money, they can reinvest the profits that they are earning in research and development, which is obviously going to be a positive in the operations of those businesses. So basically, that's what we have in terms of research and development. Then we've got increased leads to economic development. So basically, we need to understand what exactly do we mean by economic development. So it's that economic development is when the economic well-being and quality of life of a nation is improved. That's economic development. So we can only have economic development after achieving economic growth. So we are talking about the quality of life of a nation, the economic well-being, something that has to be achieved after we have achieved economic growth. So basically, you see that after we've achieved economic growth, we can now achieve economic development. So basically, economic development improves the economic well-being of people. So we are talking about the standards of living being better under economic development. So basically, that's what we have. So this becomes the last point on benefits, and we have on other part we have got cost of economic growth. So not only can we deduce positives from economic growth, we can also have negatives that we can try to deduce from economic growth. So we have inflation as a negative impact of economic growth. So how can we explain inflation since we are saying economic growth is a positive in terms of the increase in the monetary value of goods and services that are being produced in the country? So I would see that we are going to see a demand-induced inflation taking place. Demand pull inflation taking place. Remember, we are saying there is high economic activity, high income, more demand is taking place due to the high economic activity. And when there's more demand, we are going to see aggregate demand increasing at a faster rate than aggregate supply. A simple illustration that we can just try to illustrate because we all know that when demand increases, when we are going to see that when the demand curve shifts, it's obviously going to lead to an increase in price. So basically, this is it only need a simple illustration in terms of that. We can just maybe try to put our vertical axis and also we put our horizontal axis. And we are saying we have got our demand curve being negatively sloped, and we have our supply curve being positively sloped. So when we have an increase in demand, when we have an increase in demand, obviously we are going to see the demand curve are shifting upwards. So we are going to see this year becoming our new demand curve. So from there, we can now be able to try to explain that. Remember, this is what we just call it P1. The demand curve to shift from T0 from P1 to P2. So this increase. So basically, that's what we have. And obviously, being represented by price, and then our horizontal axis being represented by quantity. So basically, that's what we have in terms of inflation. Being demands are poor inflation. So this is what we have for the first part. And the second part, we are going to see boom and bust economic cycles. So a boom and bust economic cycles, we are saying if economic growth is unsustainable, then high inflationary growth may be followed by a recession. So that's the basic explanation that we can give in terms of boom and bust economic cycles. So on this third cost, we are going to see that there are going to be balance of payment deficit. Balance of payment is a comparison that is there between the exports and the imports. So obviously, if if imports becomes more than exports, that's when we are going to have a balance of payment deficit. So obviously, when there is high economic activity, we are going to see that with the high income that is being earned in the local economy, we may see that we are going to have more spending of goods outside the country, whereby the local businesses and local people go and buy outside the country since they have the income. So if we have such scenario, we may see that the imports will be greater than our exports, and then finally it will lead to a balance of payment at deficit. So basically, that's what we have on this point. Then also we can talk about environmental costs. Environmental costs are very clear; they're in black and white. In terms of a high economic activity, we are going to see many social ills taking place, environmental ills taking place. Remember, there's going to be pollution. That pollution is an environmental cost. We are going to see maybe also even the rivers, the water being polluted as chemicals are being emitted in the rivers. That's an environmental cost. So from that point of view, we can see that high economic activity can have a negative impact in terms of environmental costs. So obviously, it's something that obviously needs to be corrected at the end of the day, and it becomes a cost to the nation or to the businesses that are operating in that area. So basically, that's what we have in terms of environmental costs. So we have the last one, which is inequality. On inequality, we are saying higher rates of economic growth have often resulted in increased equality because growth can benefit a small section of society more than others. So you're going to see that growth uh, can benefit a small section of society if we have a high economic activity. For example, those with access and wealth will see a proportionally bigger rise in the market value of their wealth. Uh, and then when we have such a scenario transpiring, we are going to see a wide gap that is going to be created between the rich and the poor. The moment we have that, there is inequality in the country. So basically, that becomes the last point that we have on cost of economic growth. Remember, this is an essay question. These points need to be expanded as we are explaining them through and through each and every section. So you need to expand them so that it becomes an essay. But on the other hand, again, we also need to try to understand in terms of the format of the essay and that we are supposed to follow. Remember, when we can just say format of an essay. Remember, you're going to start with your introduction. So very important that you come up with your introduction, paragraph 1. And then when paragraph 10, definition of terms. So at least two terms are from the two or one term. If I think that one is appropriate, two or one term from the question, from the wording of the question, we can pick one or two terms that you can just define. In that paragraph, we are not explaining anything, we are just defining. For example, in our question, we are seeing that if you refer back to our question, you'll see that we've got the term interest rates that we have there. That's a typical term that you can pick. we also have the term economic growth. So you can define the two in your second paragraph. Define interest rates, define economic growth. You just say interest rates are, then you stop. The next sentence, economic growth are, then you have defined the two terms. Even if you're going to come up with 2 lines, 3 lines, that's okay. You have defined. Then from there, you go to your paragraph 3, going upwards, and we don't know how many paragraphs are you going to write. So from paragraph 3 to we don't know how many paragraphs. It's going to be your main body. That's where we're going to answer the question now. Then last paragraph is now becomes the conclusion. So this is the basic layout that you can try to come up with when you're writing your essay. So in this video, we are just trying to interrogate the main body in terms of the requirements of the main body. So what we were looking at, the responses that we are supposed to come up with in the main body. So this is what we have, guys, and also we have to take note of one-sided questions and two-sided questions. So if you try to look at our question, you see that it's saying discuss. So it means it's a two-sided question. That's why we've analyzed it by looking at benefits and cost. We've looked at both sides. So basically, question interpretation is very vital, very important in terms of answering essay questions. Let's take note of that. And please, thank you for listening, and hopefully the video was helpful. And let's take notes. We're going to come up with more videos, more typical examination questions videos, so that we might get assisted as we approach our exams. So let's get notified. Let's subscribe. Let's share. Remember, sharing is caring. We'll meet again in the next video. As for this video, I'm signing out.